Good day, everyone. I'm back again. Today I want to teach you guys how to properly pick a point of interest. Be it order blocks, fair value gaps, or breaker blocks. Those are the three major point of interest that I make use of when I'm trading. If you want to pick a point of interest, these are the three criteria you need to observe. Number one, you have to make sure, for example, let me use the order blocks as an example. You have to make sure that your order block has not been mitigated yet, meaning that price hadn't tapped into that order block yet. If it's not mitigated, it has a high probability of it obeying your analysis. That should be unmitigated, means that price hadn't tapped into there before. Number two, the order block needs to have triggered a shift in market structure. And number three, the order block needs to have liquidity protecting it. So this is what I mean. If you're about picking another block, if you're picking another block, you have to make sure that price hadn't tapped into that other block before. Let me switch to the 2 hours time frame. So you have to make sure that price has not tapped into your other block before. That's what makes it valid. If, for example, let me take this as an example. This is an order block here. But what do you notice? Price has previously tapped into this other block before. So if I'm taking my entry and I pick this other block, there's high probability that price is going to come here and break it, because this other block has been mitigated before. So I try to keep it by picking an unmitigated other block. So this one is a mitigated other block. Let me demarcate it. This is a mitigated other block. And here is an unmitigated order block. See the difference? Price has tapped in here before, and price hasn't tapped into this one before. So you have to pick another block that has not yet been mitigated. So the other block needs to have triggered a shift in market structure. Now, if you notice, there was no shift in market structure here. For example, price did not break any structure here. So see, this other block is not valid because A, it's been mitigated before, B, it did not trigger a shift in market structure. But a market structure can be consolidations, it can be a down, because there are three types of market movements. There's a downtrend, the uptrend, and then the ranging markets. So if price is ranging and price happens to break out of that range, it's still shifted market structure. You get? So this right here is a shift in market structure. Here, this is a shift in market structure. So I'm getting into MSS. This is a shift in market structure. So my other block has not yet been mitigated. Fulfilled the number one rule. 2, my other block shifted market structure, and the third one means should have a liquidity protecting, meaning you should have maybe like inducement. So your other block needs to be unmitigated, needs to have shifted market structure, and it needs to have liquidity protecting it. So this is my liquidity. So what do you notice with this one? If I picked this entry here, I would have been taken out of this trade, because it didn't fulfill the rules. It didn't fulfill my rules. I would have been taken out. But what happened here? I picked this other block that is unmitigated, has liquidity protecting it, and then shifted market structure. And what happened? It obeyed my analysis. You understand? Now, another rule on picking point of interest is you pick the point of interest that is closest to liquidity. If you notice, this other block that I picked is the closest other this to liquidity. There's another other block here, but did I pick this as my point of interest? No, I have to pick the one that is closest to liquidity. Now let me give an example. In the case that you analyzed a pair, and your pair has, for example, a breaker block before it and then another block under it, it's very advisable for you to pick the one that is closest to liquidity. This is an order block here. This is an order block here. This is a breaker block here. Now, had it been I was waiting for price to come touch this other block, I would have missed this trade. You get? So you have to pick the point of interest that is closest to liquidity. Now, if you're skeptical about, okay, there's another block here, so you don't know what to do, sometimes just shift your stop loss to cover the other block, like cover the invalidation zone of the other block, and then split your risk. If you intend to use one lot size on this trade and risking 20 pips, shift the stop loss levels to cover the other block, and then use like 0.5 lot size instead. Even if you don't make what you intended to make, you still make money, you do not take a loss on the trade. Understand? So pick the point of interest that is closest to liquidity. Make sure that your point of interest trigger the shift in market structure. Make sure that the point of interest has not yet been mitigated yet, and make sure it has liquidity protecting it. So let me write it down here. Pick point of interest that is closest to liquidity. Yeah. 2. Pick an unmitigated point of interest. 3. POI needs to trigger the shift in market structure. And then 4, it needs to have liquidity protecting it. So these are the rules you need while picking a point of interest to make sure that it's valid. These are the rules you need. So let me look into Euro JPY. Today's analysis, I still did not take the trade, but I've just been filming this lesson for you guys since I've been really busy. So if you notice, price was on an uptrend, making a series of higher highs and higher lows, making a series of higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. Then here it changed character and made a lower high, and still also made a lower low. What does not signify that price is about to shift trend? So it pulled back after it broke structure and created this inducement here. This, I'm using it as my liquidity. So now price triggered the shift in market structure, at the same time has liquidity, and at the same time has another block that triggered the shift of market structure. Now you see I'm picking the closest point of interest after liquidity. So that's just it. So if price meets all those criteria, and if you notice price, this other block hasn't been tapped into yet, this is an unmitigated other block. So I'm picking an unmitigated other block as my point of interest. Unmitigated other block. I'm picking an unmitigated other block as my point of interest, and it has liquidity protecting it. And now it has liquidity protecting it, and at the same time it triggered a shift in market structure. So all those criteria have to be met for you to then take your entry. This is the shift of market structure here. So I'm going to signify it with MSS. So you see, trigger the shift of market structure, has an unmitigated other block, has liquidity protecting it. Then I take my sell and target the next draw on liquidity. So before you take a trade, you have to make sure that your criteria are met. That way, even if you take a loss, it will be a planned loss. Understand? This strategy works, I would say 90% of the time. I don't want to exaggerate it. What I know is that if you follow the strategy properly, you hardly take losses. And then you don't have to be trading every single day for you to get this setup. You have to just patiently wait for it. So if you observe here, some people may be targeting this zone as the entry. Some people may be targeting these other blocks as the entry. But you have to remember to pick the other block that is closest to liquidity after price shifted structure. Now, for example, this is a downtrend here. I would say here, and then it broke structure. Now, let me just say this zone here. This was a previous support zone. I would say, yeah, this was a previous support zone because price broke into this zone. This was a previous support zone. Price broke out and reclaimed that zone. This was the other block that triggered the shift of that structure. So basically, structure has been broken, and this is an unmitigated other block. This is liquidity. After the price broke the structure, it came back, put back, and then created this liquidity zone here. This is unmitigated other block. To get out that block here, this is liquidity here, and here is the shift of market structure because price broke up, and this was a former support zone. Price broke it and then came back to reclaim that zone again, so it actually broke the support zone. So your shift in market structure can be a shift from resistance zone, a breakout of support zone, a break of a trend. It can be anything. All you need to know that the market has to shift from the original structure it was on before you take your trade. So if you follow this pattern, you rarely take stupid losses. Also, point of interest differ on different time frames. For example, if you're looking at this on a 1 hour time frame, what you're seeing here is a fair value gap. But if you're someone that likes to take other block entries like me, you can switch to different time frames to see if you're going to see that entry model that you're looking for. So I take other blocks. So if you switch on 2 hours time frame, what do you see here? This is an other block. So it's good to analyze on different time frames. Like check, yeah, you can have one time frame for your overall analysis, but make sure to scale down or scale up to look at different time frames to see what other time frames are telling you at the same time. So when I looked on the 2 hours time frame, what I saw here was another block. So that was why I took this setup right here. So I think that covers about it. Remember, if you're taking your entry, you have to make sure that your other block has not been mitigated yet. You have to make sure that the other block trigger the shift in market structure. It needs to have liquidity protecting it, and pick the points of interest that is closest to liquidity. Liquidity has been swept. You have to pick the point of interest that is closest to it. Alright, so that's it for today.